Welcome back to BT. Senior Business Editor Mike Eppel joining us this morning. Good morning, Mike. Oh, am I getting you? Do we have Mike?
Hello.
Oh, there we go. We got you. Second
Hi.
try.
How are you?
I'm good. How are you?
It was my cross-circuiting to be that saved us.
Yeah.
Star Trek reference.
I know. Whoosh. Sorry about that. But let's talk about gas prices this morning. It's a good day to fill up.
Yeah, we just can't have nice things, though, Faiza.
Oh, no.
Because OPEC is determined to get that price for oil moving back up by the sounds of things. The price for gas this morning is below $1.43 for the first time since January, so that's good. We're celebrating $1.43 a liter, for goodness sakes. That's the kind of year it's been in the energy market. But that follows the fact that earlier this week we saw oil below $74 a barrel. That was okay, but now the talk is this weekend, OPEC plus Russia, they're going to have a meeting and they're going to cut production because they want to see oil back above $80 per barrel. So that's kind of where it is right now. So we are expecting the price of the pumps to go back up 4 cents per liter for this time tomorrow morning.
Okay, that was super short-lived. The Bank of Canada, you say they are just like the rest of us. They're losing money on the bond market.
This has been a terrible year for your bond portfolio. You know, that balance of stocks and bonds that you're supposed to have? Well, bonds have been in a bear market all year. In fact, on pace for the worst year ever. We don't typically see bond values drop as much as they have. You know, some portfolios in that specific sector are down, 15 to 20%, for goodness sakes. But the Bank of Canada, when they were in the midst of the pandemic and trying to lower interest rates as much as they did, they were buying bonds to the hundreds of billions of dollars. Well, since that time, all of these bonds on their books have seen the interest rate spike, so they're paying higher interest on what they paid for those bonds, and they're looking at a loss in the latest quarter of $500 million. Central banks around the world are kind of in the same situation. Bank of England, for example, had to pony up, or the British government had to pony up something like $11 billion to stabilize or balance the books at the Bank of England, for example. And there's talk the Trudeau government might have to do something as well for the Bank of Canada. It can't maintain a profit or a loss. It has to balance things kind of at the end of the year. But this is going to be political again, because you've heard, the Conservatives have said the Bank of Canada kept interest rates too low and fueled inflation. And, whether or not that is indeed the case, it's going to turn into a political hot potato coming up for the Trudeau government, that's for sure.
Okay, let's talk about the big buy yesterday. Royal Bank buys HSBC Canada in the biggest domestic bank deal ever. But the question is if that will fly with regulators.
Yeah, $13.5 billion purchase. RBC had the deep pockets to do a deal of this magnitude. It was really between them and the TD. And a lot of this comes back to the fact that over the course of the pandemic, the banks were actually making a lot of money in a low interest rate environment. So the cash was there. The HSBC out of the UK was looking to sell the Canadian assets, so it seems to be a good fit. The issue here, though, is that RBC is already the country's biggest bank. It has to clear regulatory hurdles, and we'll see if they get the rubber stamp from Ottawa. It's going to take about a year to process. But Royal Bank's doing this. Look, HSBC has a massive international clientele, and that's what it's all about. Newcomers coming to Canada, international trade. It's a massive deal, $13.5 billion, biggest in Canadian history.
Wow. Okay. Senior Business Editor Mike Eppel, thanks so much for joining us this morning, and we'll see you again tomorrow.
Thank you. Thank you.